But we're now joined by Anish, Shah, Group Chief Executive Officer and Managing Director of Mahindra & Mahindra. Anish, good morning. Great to have you with us here. Glad that you're able to join us. Rajesh Jejurikar is also with us, ED and CEO, Auto and Farm Sector at Mahindra & Mahindra. Rajesh, great to have you with us early and bright and early as well. Anish, if I can start with you, these are big rate rationalizations. You're smiling, you're happy in terms of what has been done. So your first reaction to what is done, and then specifically, if you can tell us, Anish, what percentage of your fleet would now fall in the 18% slab and what percentage of your fleet would be in the 40% slab? 18 and 40, the two relevant rate slabs now. Go on.
Let me start first with the overall impact on the economy. And to me, that is the biggest factor in this change. It is a very dramatic one. It ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption. And this is something that should, in some ways, create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall. So that is the reason why we feel it is a very important milestone for our economy and sets it up in the right way. I'll let Rajesh cover the details from an auto perspective in specifics, but from an overall economic standpoint, this is a very, very positive move.
Fair enough. You're very positive in terms of the overall economic impact. Rajesh, if I can ask you then the specific bit, what percentage in the 18% slab and what percentage in the 40% slab? And of course, we will get to the tractor GST rate reduction as well, which I think is a big positive for Mahindra. Go on.
Yeah, so Prashant, like Anish said, we're delighted with the news overall. It's a huge enabler to demand and consumption. Markets have seen some kind of a slowdown over the last few quarters, and I think this will be a very good boost, timed very well with the start of the festive season. To the specific of your question, I actually want to, you got to see the auto and farm business, which is key part of the M&M Limited company, as a sum of three key segments. The tractor segment, which is tractors and farm machines, the commercial vehicle segment, and then the SUV segment. So tractors gets a big boost, 12 to 5%, which will lead to prices coming down 40 to 60%. And that on an average basis, we do about 35 to 40,000 volume a month. Then we have the pickup portfolio, which is LCVs less than 3.5 tons, which will move from 28 to 18, which is about 25,000. So I'm just giving you these broad numbers so that you get a context of the volume. Our SUV portfolio is in the region of 45,000. Roughly 40% of that will be in the 18% and 55-60% will be in the 40%. But we have to keep in mind that we also have EVs, which will be in the 5%. So overall, if you kind of, were to leave out the 40%, we have a very large chunk of volume pickup plus SUVs in the 18%. And then we have tractors and EVs in the 5%.
Rajesh, around 40% in the 18% overall. Would that be okay in the ballpark?
No, it'll be higher when you add the pickups, the commercial vehicles. So it'll be almost 65% when we add the commercial vehicles as well.
In the
when we
18% slab.
Numbers, it includes commercial vehicles as well.
Okay.
Yeah. Mr. Jejurikar, hi, good morning, sir. And Mr. Shah, thanks so much for joining in, both of you. Mr. Jejurikar, if I could ask you, I know it's very early, but maybe your team has already done the back of the envelope calculations. If we talk about the full revenue of the automotive segment, let's leave aside farm equipment. So if you talk about full year revenue, then is there a way of gauging that, what part of the portfolio, with the volume breakup that you just gave us, what part of the portfolio or what percentage of that revenue gets a positive leg up because of the reduction to 18%? And what part perhaps, which will be few, which go into that 40% category. So that percentage of the revenue, perhaps you have to see how the volumes play out.
No, every part of the portfolio will get a volume up, Surabhi, because 40 is also benefit of 8%. So what was in 40 was 48%, including the cess. So
yes.
even there's an 8% benefit. So every part of our portfolio gets a leg up. EVs are unchanged, but everything else gets a leg up between 8 to 13%.
Yeah. And the other question, and maybe Mr. Shah can also come in on this. Overall, sir, what's going to be the thought process? I mean, does everything get passed on to the customer? Or, will you have to take a slightly more nuanced call on this, depending on other input prices and other compulsions? I mean, how do you look at it? For M&M and the industry across the board, do you expect all of this to be passed on or not? Mr. Shah?
We expect all of this to be passed on. This is meant for the consumer, and the GST cut should be passed on to the consumer in full.
All right. Hi, good morning, gentlemen. Thanks a lot for joining in. Rajesh, coming across to you, you said the tractor rationalization of GST cost will ultimately bring the tractor cost down by how much?
50 to 60,000, depending on the horsepower category.
50 to 60,000 rupees, right?
7%, yeah. 40,000 to 60,000, depending on the horsepower category.
Got it.
That's
and
the 12 to 5%, 7% drop.
Okay. All right. Got that. But what about in the interim? This comes into effect from 22nd. So in the interim, will that create some kind of uncertainty, postponement of buying? How do you see customer behavior move?
There will be transition issues, Nigel, and in any transformation, there's going to be transition issues. So, we would expect the next three weeks or so to see some kind of a wait and watch. There are some issues related to compensation cess, which SIAM will take up with the government separately. But overall, I think the sentiment is very positive, and we see this as a very long-term demand driver. There will be a little bit of wait and watch through September, which may affect September volumes as customers wait and watch for the effective date of 22nd September.
And Rajesh, you're saying including CVs, 60% of the portfolio will be in the 18% bracket now, right? That's what you said.
60% of the auto portfolio. If you add tractors, it's higher.
Of course.
Which is at 5%.
Yeah. Anish, can you give us a slightly top-down view on, what you began by saying, right, which is the consumption boost and what it does to growth overall? Because, the second derivative, third derivative, etc., can be quite meaningful, which is very difficult to immediately put numbers to. So just your thoughts there, Anish.
So what we've seen is the economy has grown roughly at about 7% or so for the past couple of years. And as a result, private investment hasn't gone up as much. Capacity utilization has gone in the 75 to 80% range for many industries. So, Prashant, as we think about the economy overall, I strongly feel that this could be the one factor that really starts driving that private investment. We will start seeing consumers get a much more positive view, and that sentiment is an important one. As that happens, companies should start investing more. We're already starting to think about how do we create the supply for this, because we will need to ensure that the supply is there for that demand. And that, in effect, would be one that really starts driving private investment, which has been an important factor that's been missing so far.
Anish, is there any way, and I'm not talking for specific numbers here, but is there any way for you to give us a sense of the multiplier effect of this on, say, auto volumes? And if you can talk about Mahindra and Mahindra, the leg up, as Rajesh said, every part of our portfolio will get a leg up, pretty much. So in terms of volumes and the bump the volumes get because of this, in the ballpark, what's your sense?
Prashant, a little early to say that at this point. We've also been in a situation where we've been growing mid to high teens from an SUV standpoint, while the industry has been very sluggish. And for us, it's a product set that has enabled that to happen. So we will see a further growth rate increase, but the extent of impact is something that we will have to wait and see as to what the level of elasticity is to prices and how significant that will be. But again, from where we sit right now, we expect this to be a significant boost.
All right. Just one more question I had, gentlemen, because I want to ask about how the tractor inverted duty changes. The reason I ask this is because the GST is reduced for tractor, but the input of steel, well, there the duty is largely unchanged. So how do you manage this?
There are, Nigel, I haven't gone through all the parts, but we have seen a list of parts. So the government has tried to work on the inverted duty structure for tractors. And there are a list of parts which are tractor specific, which have been called out, which will be at lower duties. So, but I need to go through that full list to see what percentage of the input credit it impacts. It does lead to some kind of a working capital blockage, but that's insignificant in the context of the overall upside that will come out of this pricing boost.
Got it.
Mr. Shah, sir, finally, going back to the overall point, to what extent, I mean, how should we, interpret or imagine the sort of boost and, whether it's going to be a lasting boost to consumption and specifically to the auto sector that these cuts will yield? I mean, say, given your monthly run rate, of course, there'll be an immediate bump up, I guess, all the pent-up demand, maybe in the next 2-3 months, especially in the festive season. So by how much more than the average anticipation would you expect your volumes to go up? And then is it a one-time bump up? I mean, or how should we look at the longer-term impact of this?
So the basic impact will be is the fact that with prices coming down, demand should go up. In terms of specific numbers for us or for any particular company, it is going to be difficult to say, but it will be a longer term impact. What I could say is from a macro basis, I'd expect this to take our growth rate as an economy to greater than 8%, and for us to be somewhere between 8 and 10% over the next few years.
Okay, so so we're going to take that and pull that flash out that Mr. Shah thinks that the GST cuts can take India to 8% growth rate in terms of an economy. And again, Rajesh, if I could ask you the question, so if you were expecting X as your festive sales number, will it be X plus 20% now, X plus maybe 25, 30%, just so that we can wrap our heads around the size of the impact?
Yeah, you clearly don't give up, Surabhi. So.
Just trying.
I think, Surabhi, the reality, as Anish said, is there is limited time to capitalize the upside in the festival period. We are literally 20 days away from the festival period. We can't increase capacities or production outputs. Festival period is a 30-40 day period. So I honestly don't think we're going to get a wholesale billing upside in the short run. This is more a long-term game.
All right. So glad that both of you could join us. Anish, thank you very much for being here on the channel, explaining the impact and what many believe is the one company which perhaps benefits the most within the auto space. Rajesh, glad you could make it. Thank you very much for joining us here on CNBC TV 18. Gentlemen, goodbye.
Bye. Thank you, everyone.